Our guest for the day, Mr. Ajay Piramal, the chairman of Piramal Enterprises. He is estimated to be worth about $3 billion, and he has a wide range of business interests ranging from glass manufacturing to pharmaceuticals, from financial services to real estate, to name a few. Thank you, Mr. Piramal, for taking time out for Business Insider's Global Trends Festival 2020. We are absolutely delighted to have you here. And I want to come to you with the first question. This COVID-19 crisis is not just one crisis, it's a bag full of them. And you have many businesses that have reacted differently, have had different tolerance levels for all that has happened in the last 10 months. So just like we are talking about building physical immunity to fight with the virus, how do you think we should go about, what do you think we should do to build immunity for the economy?
I think first let me congratulate all of you for organizing such a fantastic program, and so many varied speakers have given a great insight into what their thinking is. So congratulations. So to build economic immunity, the first thing I think is that we must have a positive attitude. Whether it is your personal physical immunity or economic, we need to be positively inclined towards that and see to it that these things will also, this time will also pass. Keeping that in mind, I think we have to look at what is going to be the future of the economy. And here I feel that we need to see that those which are the weaker sections and those are the most disadvantaged, how do we ensure that they survive? Everybody, there will be pain in most of the businesses, and most of the people will suffer pain. There will be people who will also come out stronger. But let's look at the most vulnerable, whether it's the most vulnerable businesses, whether it's the most vulnerable human beings. I think that is required, and that's where many of them need help, and that's where the government has to see to it that these have been protected. That's what I'm seeing in the last 7 months the government is doing, and we'll have to continue to do that, whether it is in terms of providing some more income in their hands, providing some more employment, whether it's in terms of food. So that is one thing. Second thing is, for economic immunity, we must understand that there are certain sectors which every country must look at as almost like a defense program. Just as you have armed forces for defense, there will be certain industries, certain areas where we need to actually further strengthen ourselves. For instance, whether it's in agriculture, whether it's in terms of pharmaceuticals, whether in terms of healthcare, these are sectors where we have to become stronger so that we can be self-reliant in that sense. Also, this concept, I think, of the Atmanirbhar or the self-reliant is a very important thing. That's how you'll build in immunity.
Speaking of managing businesses, managing organizations, you spent the 12 months before the COVID-19 broke out in repaying debt. You repaid about $2 billion of debt in the 12 months before that. Did you see another crisis coming? I mean, maybe not in the form of a pandemic, but Indian economy was already slowing down. Did you see that things are going to get worse? Let me build a moat around my company?
So the reason why we brought down debt was because we were seeing that, especially in the funding for NBFCs, there was a clear slowdown that happened. There was the IL&FS crisis which took place in September 2018. And after that, we saw many different companies falling on the wayside. And these were very well-reputed companies, whether it was the whole, the Z Empire, the Jet Airways, the ADAG Group, and so many, the Yes Bank. So we could see that one after the other, there were challenges. And unfortunately, in these challenges, though they were not all connected with the NBFC, we saw that the slowing down of funding to NBFCs. More so, real estate also took a beating. So we said that the best way to tackle this crisis is to bring in your own equity and to actually reduce the debt. And thus, I'm happy actually, we have reduced our debt by 20,000 crores, almost $3 billion.
Oh, that's an interesting point you made, Mr. Piramal. I mean, this may be a management lesson. Are you saying that companies should increase their skin in the game promoters should increase their skin in the game when there is a crisis?
I think you. It depends on what you think is the future. If you think your business is good and it's going to do better, then it's better to increase your skin in the game. Our belief is that actually post this crisis, the stronger ones will survive and actually do better than what they were doing before the crisis. It's a survival of the fittest. And if you have to survive in the fittest, you have to strengthen yourself. And the way you strengthen is also to bring in some more skin in the game.
Fantastic. I mean, and on that note, then I need to ask you, why did you sell the 20% stake to Carlyle Group in your pharmaceuticals business? I mean, that's the strong part of your business. Pharmaceuticals is a hot sector right now. And I'm also tempted to remember your deal with Abbott in 2010 when you sold a big chunk of your pharmaceuticals business for $3.8 billion. That was right after a crisis. This is in the middle of a crisis. What's the strategy here?
So again, if you look at it, in 2010-11, we sold our domestic business for 3.8 billion. Since then, we had a very small business of what we have in pharmaceuticals today, which is really a global business and a OTC business in India. This was pretty small in 2011. Since then, we've built this up and to become a sizable business, a global business, where almost 93% of our revenues come from global clients. Here we believe that, and we felt this even before the crisis, and the crisis has only just enhanced this view, that there are many opportunities which are available globally. There is a consolidation taking place in this pharmaceutical space which we are in, where we do contract manufacturing of services and products for global companies, where we also manufacture and or sell complex generic products to global hospitals and other global countries all over the world. So we saw that there are many opportunities for growth. And that's when we said that let's get a global partner to be with us. They would be on our side and we can accelerate this growth rate. We've been growing at about 15-16% year on year for the last 9 years. We want to accelerate this growth rate, and we feel that with a partner, we'll be able to do that more. So that's the reason there are several opportunities, both organic growth as well as through acquisitions, and we want to take advantage of that.
I can't tell you how much we journalists love this word acquisitions before it happens. But so what are you looking for? What are you scouting for? And may I also ask, what is I mean, today your market cap is about 30,000 crores. Based on this Carlyle deal, we would assume that for pharmaceuticals is about half that size. And therefore, what is it going to be in the next 3-4 years in terms of proportion of your business or in terms of the size of revenue and the scale of business?
So in the midterm, what we are saying is that we will have two independent companies, both pharmaceuticals as well as our financial services will be independently listed. So that's what we are going to go towards. What will be the size? Unless I tell the general people, I don't think I'll be in a position to give you forecasts. I can only say that in both the sectors, both pharmaceuticals and in the financial services, there are several opportunities for growth. We have on our side enough capital. So today, if I look at it in an overall consolidated basis, the capital that we have is about 35,000 crores, and our debt is going to be less than that even today. So it's less than a 1:1 debt equity. So there's enough opportunities to grow in both of them. As I said, post the pandemic, I believe that more consolidation will take place, whether it's in pharmaceuticals and also in the financial services space. And we are just positioning ourselves to be ready, whether it's in terms of the equity, as I said, in terms of the people. We already have a very good team of people in both the businesses, and whether it's in terms of the new ways of doing business, in terms of technology. We're getting ready for all that.
So there are still surprises in store from Mr. Piramal. We will keep watching this in the next few weeks and months. He's definitely told us he's looking for acquisitions. So watch out for deal news coming out on In Business Insider. But just before I let you go, Mr. Piramal, like as somebody who is a big stakeholder in the financial industry in this country, there are two questions I have, honestly. One is, what is the whole credit growth is as an issue? It did not really come up after COVID. That was a problem even a year and a half ago. And it has gotten worse. Are you really sanguine? Do you feel confident that this economy will recover, whatever shape it might take, but let's say at a decent pace, without this credit coming back? And how do we bring it back? Because interest rate cuts are not helping, liquidity is not helping. What is it that can bring credit back into the system?
So I think you've put a very important question, and I think your observations are absolutely right. First of all, I think there is a clear need for the economy to grow, and I cannot see there is no compromise if will it grow or not. It has to grow. We've seen that when when the economy grows, that's how you can lift millions of people from poverty, from below poverty to above poverty line. How you can actually distribute wealth amongst people. So there is no question in my mind, it has to grow. And a very important point that you've touched is that it cannot grow unless credit grows, because you've seen this is a worldwide phenomenon that if credit growth doesn't take whatever the economy growth, if you want it by 10%, credit growth must be 15%, and the other way around. If credit growth comes down, the GDP will also come down. And in fact, we've been saying this for a while. Ever since the ILFS crisis, we've been saying that we need to see that there is more funds which are available for growth. Today, the sad part is that though the funds available with the banks is actually more than what they are lending out, and therefore, if you see the credit credit to deposit ratio is going in the wrong direction. So we have to ensure that. And for this, the NBFC sector is a very important sector, because they are parts of the economy where only the NBFCs can reach. It is not possible for the banks to do that. So we have to, first of all, ensure that there is enough banking, there are more banks available, and more NBFCs are available. And we find more ways to lend to NBFCs. I understand that there have been mishaps in this that probably requires some more control, but we also need to ensure that more funds are available so that the economy grows.
Credit growth doesn't happen for two reasons. Either the banks are not willing to lend, or there are no borrowers. And I think the second is also equally true.
So why are there no borrowers? It's a fact that the borrowers have also come down. Why are there no borrowers? One is because people need to have, today the issue is that people don't have enough confidence, and they would rather preserve cash than to invest in business. Even look at our own self. Why is it that we have a 33% capital adequacy? When all the Basel norms and all will talk about 15%, if you're conservative, 20% capital adequacy. Why is it that we have this? Because we also feel that these are difficult times. It's better to have a little more leeway. But things will change. And for that, I think we have to get people to have confidence that it is possible to do. Second thing is, I think one thing we must appreciate is that today there's no long-term finance available in India anymore. Most of the banks, whether it is, and the private sector banks are not lending long-term. So how will you get asset creation? The public sector also, they have reduced their long-term lending, project financing. So I think there is talks about, like in the good old days, you had the development finance institutions, whether it was the IDBI, the ICICI, IFCI. We'll have to create these where long-term funds are available. Otherwise, you will not see projects.
Mr. Piramal, we just spent 2 decades or more in divesting out of these institutions. You're saying that we need to create them again. Isn't that going to be a little ironic?
Yeah, but there are certain things which you have to do. I mean, you know that, yeah.
Mr. Piramal, thank you so much for taking time out. I know I have a lot of questions and I know you have answers to everything that I am capable of asking. But that's all the time we have here today.